Bitcoin has had the worst start of the year out of any year since its inception. It's lost 31% as of today, wiped out more than $214 billion of value. So let's begin. What happened this year so far? Lyn, I'll start with you.
So in general, Bitcoin is showing risk-off behavior, kind of an early sign for the market. So it started to show weakness before the other indices. And my base case is I thought this rally probably had more legs to it, that it would stabilize a little bit better, but we've seen that that's not really been the case. And we started to get that confirmed in economic data. So for example, if you look at the past 4 major rallies in Bitcoin, so 2011, 2013, 2017, and 2020, it's coincided with rising PMIs in the United States, purchasing managers indices, basically economic expansion and acceleration. And it's generally had its bear markets coinciding with periods of economic weakness. And so as we enter 2022, the problem is that PMIs are kind of rolling over. And so we don't have a gigantic sample size to work with. It can potentially decouple from other assets. But in practice, it's been a risk-on asset more often than a risk-off asset. And so I think, it's somewhat challenged here along with other risk assets. It's kind of been correlated to like the either large cap tech stocks and particularly the ARK style kind of unprofitable growth stocks. They peaked back in February of last year. Although, Bitcoin's it's given better 2-year returns than those ARK stocks, it still generally had a similar shape to a lot of them. And so it's been under pressure, I think, for similar reasons.
Yeah, so I agree with Lyn. I mean, what's interesting about it is there's a couple coordinated things. For instance, 2017, we saw Bitcoin top out about a couple months before the stock market. We've seen that again here. In addition, you could see how the decline that started from that 69,000 was really leading a lot of these ARK style, C Limited and some of these other plays, Cloudflare, they've all collapsed now. I actually think that based on just the other day, in fact, yesterday, I called a short-term bottom in Bitcoin based off a major kind of technical retrace. So just one of the little tidbits I'd love to just throw out there to investors is if you look at the April high to the low that hit in June before we ran up to 69,000. So the 65,000 high to the 29,000 low, the exact, that distance, that dollar amount that it fell was just replicated as of yesterday when we went from 69,000 down to 33,000. So just on a short-term basis, again, I'm someone who thinks Bitcoin eventually is going to head lower. I think sub 20,000 is likely, but just in the near term, I do expect a bounce maybe back into the low 40s.
Now, Lyn, last time you were on the show, about a couple of months ago, you said your medium-term outlook was, well, you said that the indicators pointed to more bullish action than bearish. Are you still sticking to that view?
So after the price weakness, I think that it basically on-chain indicators are suggesting kind of neutral to bullish, where basically they're showing signs of kind of capitulation, kind of it's in value territory relative to its generally on-chain indicators. And I think that's contrasted by the fact that the macro environment is still challenging as far as I look out through the rest of the year. And so I think it's kind of playing ping pong between those two forces. Basically, the way I described it is that demand peaked back in Q1, right? So back when ARK stocks topped, when Bitcoin had a big local top, and basically ever since then, the demand side has been weaker. What's been holding it up is that it has a tighter supply dynamic than prior bear markets so far, meaning that the combination of basically dollar cost averagers, and you also have, say, miners holding a larger percentage of their own mining production. That's been a common trend, especially among publicly traded miners. Basically, the supply side's tighter than normal. And so the kind of way I've been describing it, it's kind of like dry kinder. So the supply side's very attractive, and you could get supply squeezes, but it's really hard to have a sustained rally until you get more demand. And that's traditionally been associated with risk-on environments. Because I'm not very particularly bullish on equities this year, my base case is that Bitcoin probably chops around for a while. I don't have specific price targets, like if it'll break below the 30,000 mark or not, or if it'll go above 50,000 again this year. My overall kind of base case is intermediate term neutral. I think there's a lot of variance for what it can do, while still being structurally bullish over a multi-year period, probably coinciding with the next risk-on period.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Gareth, your downside target, you've recently told me that you downgraded your downside target to below $20,000. You said that before it could touch $20,000, but now you're saying it could go even lower than $20,000. Can you state your case? And I'd like to see if Lyn agrees with you.
So the couple things that kind of bother me is, number one, you have the stock market that's only fallen now. I mean, the Nasdaq's down, 15% or so, but the S&P is not even down quite 10% as of today. And you got to think that equities, and I think Lyn mentioned this, is that you probably do have more downside. So the question is, if you see equities correlating with a certain percentage downside move on Bitcoin in the de-risking environment, does that push it? I mean, we're already at 36,000. We just hit 33. It's not a stretch to think that we could flush down. And another thing that kind of bothers me is that every cycle on Bitcoin, it's been basically an 85% drop. Now, again, cycles can change. We know that. But you have to kind of say to yourself, if that 85% drop does come in from 69,000, that brings you down to about $10,000. I'm not sure if I think it's going that low, but you have to factor that into your thought process. And lastly, I'm still in the camp that the internet bubble, the dot-coms, and I traded through this. This was my beginning years of trading. It's very similar, right? You had dot-coms that were pennies at one point, like Dogecoin, or sub-pennies. They would literally go up 200, 300% a day to the point where they were multiple dollars in terms of these companies. And you got this bubble. It was a new technology, just like blockchain. There was so much hype around it. And then you had this washout. And again, Amazon at that point was $100. It went to $5. So you had this massive decline. And ultimately, we've seen Amazon rip higher, right? And it's become one of the biggest companies in the world. So years out, I think it's hugely bullish for Bitcoin and Ether and these other ones. But I still think we need to see a washout of these meme coins. I mean, there's so much junk in the space, and it's hard to imagine that washout occurring unless we get a bigger move down sub 20,000.
So I generally agree we need to see a washout of a lot of the meme coins and the altcoin space broadly, anything that doesn't really have fundamentals behind it. And I think that could take the form of time or space. So if Bitcoin corrects downward, it obviously puts a lot of pressure on those usually. But also, I mean, if Bitcoin grinds sideways, if it just becomes like a bear market for like a year where it just kind of goes sideways, a lot of those other tokens drain out value. So for example, Dogecoin peaked back really early in 2021, it's off tremendously from its highs, even as Bitcoin basically had this big choppy sideways pattern, even managed to touch slightly new highs later that year, whereas Dogecoin bled out. And so I think you could have an environment like that. I think my overall base case is I'd be somewhat surprised to see a sub 20,000 print. I don't rule it out as an option though. One way I would describe it is that, Bitcoin's had these 85% drops in the past, but also had massive blow off tops in the past. And most of the indicators show they didn't reach the same level of exuberance in this cycle. Basically, you're measuring it from a less extreme topping point. It had more of that rolling top than a huge spike. Basically, the market I think is more mature. So I would be somewhat surprised to see a sub 20,000 print. The environment that I can imagine getting there, if I would have put on my bear hat for a second, it would basically be that the Fed's tightening, or at least talking about tightening into a declining PMI environment. And if they do so when we saw Bitcoin after the prior bear market, it started to stabilize above 6,000 after hitting 20,000. In 2018, it was stabilizing at 6,000. But when you had that late 2018 Powell autopilot, tightening into the declining PMIs, that's when you had Bitcoin collapse to nearly 3,000, right? So, and you had massive kind of liquidations. And so I basically think if you have a liquidity event, if you have credit markets freeze, if you have some sort of major event like that, I could see a very illiquid Bitcoin spike down. I think barring that, I'd be somewhat surprised to see a sub 20,000 sustained level.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.